The phrase, exceptional no more, captures a profound shift in how the United States is perceived across global markets, politics, and finance. For decades, the U.S. was treated as a uniquely stable and dominant force. Its markets, institutions, and companies appeared untouchable. Investors and policymakers alike often assumed that no matter what shocks arose, the U.S. would remain the world's safe haven. But recent events suggest that this assumption may no longer hold unquestioned. Breakingviews highlights how, even as U.S. equities continue to thrive on the back of artificial intelligence, corporate earnings, and investor optimism, the country's political and policy environment is sending out very different signals. President Trump's return to power has ushered in a wave of measures that appear inconsistent, protectionist, and disruptive to the foundations of U.S. economic leadership. Among the most striking examples is the sudden imposition of a massive annual fee on H-1B visas. For years, these visas provided the American economy with high-skilled workers in technology, engineering, and medicine. By raising costs so sharply, the U.S. risks cutting itself off from the global pool of talent that helped build Silicon Valley's dominance. This decision is emblematic of a broader suspicion toward openness that was once central to U.S. strength. Another visible shift is in energy and climate policy. Long-term renewable projects have been canceled, and commitments to international cooperation on climate have been dismissed with contempt. Such reversals may win short-term political points, but they reduce the predictability on which global capital thrives. If investors begin to believe that U.S. policy can swing so drastically, they may question whether America remains the safest long-term bet. Trade policy has also entered uncharted territory. Tariffs are no longer limited to specific sectors but are spreading across industries ranging from pharmaceuticals to kitchen goods. At the same time, the government is intervening more directly in technology platforms, as seen in moves to reshape ownership of major social media companies. This creeping state involvement challenges the image of America as the home of free markets. Breakingviews also draws attention to worrying signals in credit markets. Traditionally, sovereign governments can borrow at lower rates than corporations, since states are seen as the ultimate safe borrowers. But now there are cases, particularly in Europe, where leading companies enjoy cheaper credit than their home governments. If such patterns expand, they could destabilize the assumed hierarchy of global finance. For the U.S., with its soaring public debt, this possibility looms large. The key argument is that U.S. exceptionalism, the idea that the country is always a uniquely attractive destination for money, talent, and trust, cannot be taken for granted. Markets are forward-looking, but they also rest on confidence in the underlying system. If that confidence erodes, Wall Street's highs may not protect America from a loss of its privileged position. Still, it is worth noting that the U.S. retains deep advantages. Its capital markets are unmatched in size and liquidity. Its technological ecosystem continues to lead the world in artificial intelligence, semiconductors, and digital infrastructure. The dollar remains the reserve currency of choice. These factors give the U.S. resilience that rivals like Europe, China, or India cannot easily replicate. The real risk, then, is not sudden collapse but gradual repricing. Investors may demand a higher risk premium for U.S. assets, especially if policy volatility continues. Companies that rely on international talent and open markets may face tougher conditions, and allies may diversify their financial and political ties, reducing reliance on Washington. The conclusion of "exceptional no more" is not that America has already lost its special role. Rather, it is that the assumptions underpinning that role are weaker than before. In a world of shifting power balances, debt concerns, and unpredictable leadership, the U.S. must earn the confidence it once received automatically. For markets and policymakers alike, this realization could mark the beginning of a new era, one where exceptionalism is no longer the default, but something fragile, contested, and conditional.